In this video, we're going to talk about the likelihood of a US recession in 2023. Earnings have left a lot of people optimistic. A lot of big-time companies saw their stocks rally this past week as earnings impressed investors. We're talking Meta, Google, Amazon, Comcast, eBay, Eli Lilly, Microsoft, and Apple. The stock market is looking beyond a lot of dark clouds such as political tension all over the world, energy market volatility, high inflation, high interest rates, banking instability, tepid economic growth, and layoffs. All this is making it seem like a recession is inevitable for 2023. The U.S. economy grew at a slow pace of 1.1% in the first quarter of 2023. It seems very unlikely that the second and third quarters are going to show positive economic growth, but we have to see. Despite some relative progress, the core consumer price index, which excludes food and energy, gained 5.6% year over year in March 2023. It's good news that the figure is down from its 9.1% peak in June 2022, but that's still a far cry from the 2% inflation target. The Fed has taken an aggressive approach to combat inflation, but their best solution, which is to increase interest rate, comes at a major economic risk. This scenario increases the cost of borrowing money, discouraging companies from taking on debt to invest in expanding their businesses. Elevated rates also reduce consumer spending, easing demand pressures that have contributed to rising prices. Most analysts expect rates to increase to 5% at the next Fed meeting, which is scheduled May 2nd to May 3rd. Inflation and rising rates have not yet dragged the U.S. economy into recession. In addition to modest first quarter GDP growth, the U.S. added 236,000 jobs in March, and the unemployment rate remains historically low at just 3.5%. But investors should continue to monitor the labor market as interest rates rise because it seems like every day another big company announces layoffs. The market is currently pricing in about a 60% chance that the Fed will hold interest rates at their May levels through July's Fed meeting, according to the CME Fed Watch tool. According to the Conference Board, the probability that a recession will happen within the next 12 months is 99%. In an article published in mid-April, the think tank said it expects a recession starting in mid-2023 after increased economic weakness, with the second quarter expected to be the first of 3 consecutive negative growth quarters for GDP this year. Morgan Stanley said in a post on its website in late March that the banking crisis has increased the risk of a recession. Not all observers agree on how high the risks are for a U.S. recession. Goldman Sachs chief economist said there's a 35% chance of a U.S. recession in the next 12 months. This was revised upward from 25% because of the banking crisis. The Fed itself is predicting a mild recession later this year. This is the first time anyone can remember that the Fed has predicted a U.S. recession. Over the past 70 years, recessions have lasted anywhere from 2 months to 18 months. The last 15 years saw the shortest and longest recessions, with the longest being the Great Recession of 2007 to 2009 lasting 18 months, and the shortest being February 2020 to 2020, which lasted 2 months. It's a good time to hang on to your job and pad that emergency bank account and invest in your own skills. Just like all recession, the pain does eventually come to an end and is often followed by a robust recovery. If you like my video, please subscribe and I'll have more content in the days and weeks to come. Thank you so much.